So hi friends, this is Raghav, your friend from the YouTube channel, and today we have one more guest with us. His name is Soumya Chatterjee. He's an experienced trader, and he's been into trading since last 7-8 years. And today we're going to talk to him about trading basics and trading mindsets and different types of trading. So this will be a podcast series of 3-4 sessions where we're going to talk about different aspects of trading in each session. So today is the first session of the series. So let's start. Before going forward, let me just briefly introduce you to Soumya. So Soumya Chatterjee, he's a graduate from IT Delhi, and he is he's graduate from ID Bombay. Yeah, he's been working as a data scientist since many years, and he's also been an active trader in the equity markets. So he has a lot of experience to share with us. So over to you, Soumya. I'll give it to you. Just give a brief introduction about yourself. What
Raghav.
you do
Thanks,
and
Raghav.
what is your experience about trading in general? Yeah,
Right,
over to
right.
you.
Yeah, thanks, Raghav. Thanks, everyone. Just wanted to share some of this experience. So I was talking to Raghav, and he told that it will be good to share some of my experiences over the
Yeah.
years which I have. And
We would
I'm
love
a
to
data
hear your
scientist.
experiences.
Yes,
Yeah.
absolutely. So yes, I am a senior data scientist, and I used to work with Raghav in one of our previous companies, and we used to share a lot of thoughts regarding investing, trading in general. So Raghav is more into investing, and I'm more into trading. And so that can be, if, a curious person can ask, what is the difference between the, two things? Why two
Yeah.
persons prefer different style of trading and all? Uh, I'll get into that. Uh, so I'll just start with my, trading journey. So I think
Yeah.
I started in 2010, 11, around 2012. I'm
Okay.
first, exposed to market. So
Hmm.
initially, when you really start into the market, you don't know what is the difference between investing, what is trading, what is derivatives, and so many things in the market.
Yeah.
So there's a very thin line. I mean, initially for novice traders, there's a very thin line between trading and investing. We see some opportunities and put some money in some stocks. So that's how I also started. Though, only thing that I was cautious when I started trading, and I didn't, wanted to risk a lot of capital at the first. So that helped
Yeah.
me
That's the wise thing to do.
mostly. Yes.
Yeah.
So that helped me to, save some of my capital for, good opportunities at a later stage, and all. Mostly, I started my journey as an intraday trader. So it is the easiest kind of thing. It looks in the paper. It's just like you buy some stocks today in the morning and sell it in the afternoon or sometime in the evening. I mean, as long as the stock exchange permits, of course.
So,
So
Shomo, before we
right,
go into that, I mean,
right.
I want to know about your, how did you, like, what was the motivation behind
Right,
starting trading? Like, what,
right.
what, what attracted you towards trading? And did you see someone in your family do trading, or some of your friends who were doing it, and
Yes, I mean, I would say
what was
that
the
a lot
entry
of my
point for
friends
you?
were into exactly. So I think I had few more. I mean, a lot of friends who are into trading.
Okay.
So they were actually motivation for me. They were kind of used to trade very frequently,
Hmm.
and I used to just talk to them, and they told that if you want to make money, and if you want to make money very quickly, trading is the way to go. So
Mm-hmm.
yes, the kind of you always feel your adrenaline when you are into the stock market, getting into the first trade and doing things like that. So
So you
I
came for
will say that
adrenaline rush.
not really to make, definitely everyone comes there for money to make it, or I would say that to make money very quickly. So
Yeah.
I think it's a very good question when you ask that
Hmm.
there are certain behavioral traits of a trader. only he comes to know when he starts trading. So
Yeah,
I
yeah.
used to
We will
actively
come to
always
that.
follow
We'll
stock
come to that.
market. Yeah,
But before that,
yeah,
so I from what I understood is that you had some friends who were doing trading, and
yes,
you looked at them, and you sort of got motivated to
yes,
do trading by just looking at how they
yes.
were.
I
Uh,
started reading about trading as such. In Google is the best friend.
hmm,
So I
hmm,
started
hmm,
reading Investopedia about
hmm.
everything about ins and outs of trading, how
Yeah.
to trade, who should trade, when to trade, what to trade. So
Yes. Yeah.
yes,
So
so
basically, there was no formal, uh, basically no formal
formal
training.
training I would say to start
Yeah.
with.
So
No, not
you
really.
just jumped in. You looked at your friends and you just jumped in, right? Which
Yes,
is which
yes,
is I think 99% of the people. Uh,
yes,
that's how they start trading, which is not a right,
yes.
which is not the right
Absolutely not.
way of
Absolutely not.
starting
Absolutely not.
in the markets.
But that's how people generally start their
Yes.
stock market journey.
Yeah, that's
So
absolutely fine. I mean, that's like a very
yes,
honest experience that you shared with us. I mean, that's how people, uh, every like my 99% of the people, that's how they start. So it's
yes.
okay.
Make some
I
quick
mean,
money.
yeah, but the more important thing is, you start as a novice, but how do you improve, and how do you uh, you
Yes,
know uh,
yes,
how do you learn from your mistakes, and how do you become better as a trader? So that's the most important thing, and which we want to hear from you. So my next question would be, what exactly trading is, and how, like, how do you differentiate it with investing? Like, in maybe, in simple words, if you can, you know tell people that,
right, right,
what are the
right,
major differences, and how do you differentiate trading with investing?
right. So the I will try to make it as simple as possible. So you know when you are investing, so this word is itself is little heavy, I would say. So investment
Yeah.
means that investments of time, investments of your research work, or you are really believe in something. So for example, you invest in a stock. Whenever we say invest in a stock, that what it should ideally mean, that you have researched the stock, you have confidence in the stock, that in the long run the stock will really give you a lot of good returns.
Hmm.
uh, on the contrary, I would say trading is a T20 game. I mean, it's just that difference between a Test cricket and a T20 game. In T20 game, the variance is high. Even in a smaller team sometimes wins, and the bigger team loses at times. So the real difference, or the key difference, is the time frame here. Investment requires a certain time frame, certain research work, methodologies, to really understand about to really understand the value of a stock in long run.
Mm-hmm.
Whereas trading is, though it looks simple in paper, it can be any stock at all. It can be a penny stock, it can be a mid cap, it can be a blue chip, anything.
So you're saying that
So
for trading, it is not necessary to research about the stock,
research
right?
about the stocks.
Yeah.
Yes. You need to figure out when it is at the on the lower side of its the price, and you want to
Hmm.
get an entry into the market. And once the stock reaches to a above level according to your risk appetite, you just want to come out and pocket whatever profit that you have in a short time. So that is very simple. I mean, but
Hmm.
what happens is that short term markets are really very unpredictable, and that is what no I will get into probably future sessions, what makes it so difficult. Though it is so easy to start with, like trading, I can pick a script if I from certain indicators I
Yeah.
find it is the right time to get into. It's really really very difficult to make money out of it.
Yeah. Yeah. Especially because of the new apps that have come across. Like, anybody can easily start
Yes,
trading on their phone. You just need to
yes,
log in and make an account in an app.
yes,
um,
yes.
so yeah, I mean, that's an interesting point. So basically, from what I understand is,
I mean, I would
um,
say that a very good stock can perform on a certain day, right? So the market is crashing, let's say, due to some economic news, or there is an overall, downfall in the market, in the global markets as well. A very
hmm,
good stock, a very blue chip stock, can come down on a certain day.
hmm,
Uh,
hmm,
but you know, that doesn't mean the stock is itself bad or good. But when you
Yeah.
are trading, you don't really look at the the quality of the stock. You just try to follow the trend. I mean, in the trading, the thing that many people follow, and I also find it useful in the later part of my career in trading, is that trend is your friend. This is the uh, very
Yeah.
common proverb that people use. So it's
Yeah.
just about following trend and following the markets in certain way that you want to capitalize on the small downfalls or the rise of the particular script. That's all you're trying to do.
Sure. So that's interesting. Basically, I'm an investor. I'm not a trader. So
Right.
for me, it has always been, it has always been about looking at a company, looking at its fundamentals, looking at its business model, looking at its financials, and
Right. Right.
if I find it, good, and if I find it worth investing for the long term, I just I if I have conviction in the
Yes.
business and the financials, then I just
That's a Warren Buffett style, I would say. You are so
I
fond of
I mean, I wish I can reach the heights that he
that
has
level.
reached. But so, but in trading, on the other hand, you I think you don't need to look at financials, and you don't need to look at balance sheets and business models, right? So what do you look at in trading? So instead of looking at fundamentals and financials, what is the thing, or what is the analysis that you need to do in trading? Could you just briefly give uh, some idea about that?
Right, Raghav. So I think in trading, the in if in a one word I need to summarize what I look into, or what traders look into, is opportunity.
Mm-hmm.
So
Yeah.
unlike investing, if you believe in a stock, there is you know no at least, I mean, I would say there is a particular time frame or a particular time when you need to get into the stock. For example, whether in trading, on the other hand, it an hour of difference can make a huge difference between winning and losing. Even I would say not even an hour, less than that. So even minutes and seconds also matters in trading. So that also makes it a little difficult. So
So basically,
what we
timing is
difficulty,
very important.
timing is very important. Timing the market.
Yeah.
And we have devised, I think, the over the past 10, 20, 30 years, the the, the trading has really evolved, and there's a lot of technologies now into involved in the trading. But most importantly, they all rely on certain indicators. For example, I'm talking about let's say a simple moving average. We also build models using simple moving average.
Yeah.
So let's say if I talk about it, let me share my screen. That will be easy to explain for me as well. So if you just look at a bank nifty chart, for example, just
Mm-hmm.
pull this chart just for reference. So everywhere there is a trading opportunity in this chart. So unlike investing, what trading also sometimes is little tricky is that you can make money when the market falls again. But if I just talk from a very simple moving average point of view, so you basically want to understand a lower point or the dips in the in the candles or in the chart, and want to get out as soon as you reach you get certain profit, or you just sense that the market is going to come down. The tricky thing here is to understand from the signals when the market is going to reverse, and
Okay.
that
So
is what I was
basically,
mentioning, that
what I got from it, that you look at some signals, and based on that, you time your entry, and based on those signals, you time your exit as well, right?
yes,
And it has
yes,
to be very, very precise, and it has to be, the timing has to be very, very precise in order to make
exactly.
profits, right?
Three things I would say.
Yeah.
One is a trading strategy,
Yeah.
discipline, and time commitment. These are broadly three things you need to follow very diligently.
Yeah. So I was coming to that. So now that we know that, what is the difference between trading and investing, like on a very, very higher level, we understand that. So now, my next question, like I was coming to, is that, what are the things that one should, look at, or what kind of a person uh, should start trading, or should look at trading, or what are the traits that are required uh, to become a trader. If you can just maybe mention maybe 3-4 uh, points which are absolutely essential to to become a good trader. Like maybe it can be behavioral traits, it can be uh, what type of skills are required, what
Right.
type of technical skills, behavioral skills, maybe what kind of time commitment is required, anything, like it can be anything, but maybe the 3-4 top things which are absolutely essential uh, before someone looks to start trading. What are the things that one should look at, or what one should think about before getting into trading?
So, rightly you said. So the skill sets are different with respect to behaviorals as well as the technical skills. I'll start with the behavioral skills. So, uh, I would say if you are impatient,
Yeah.
little bit of impatient, and really don't have the you know to be reach at your old age, you want to become reach quickly. I would say at least you
Mm.
aspire to be, and I would say you can afford a lot of time. You can invest some time for the on-screen activity during the day. Then you should definitely try trading. Though I talked about impatience, but I don't mean necessarily that means impulsive. So you have to absolutely follow discipline. So you have to be a disciplined person as well.
Mm-hmm.
Uh, Impatience is okay. You don't need to wait for years to become richer, but you have to follow certain discipline, and
Yeah.
that you need to follow very diligently. uh, so yes, you have to have some time, you have to invest a lot of time, so you should be patient in that regard. uh, and you have to follow certain rules and disciplines to become
so
successful,
so so
I would say.
uh so y- by time you mean that uh like uh I mean, if for me as an investor, I mean the time commitment is not that much, right? I do my research mostly on weekends. I filter out some good companies, and then when the market opens on Monday, I just go and buy some stocks, and I don't have to look at the screen every every hour, or every 15 minutes, because it doesn't matter to me whether what is the movement of the stock in the next 15 minutes, or in next 1 hour, or next one day, or whatever. So what you are saying is, in trading it is not like that. In trading you have to uh, whenever you place a trade, you have to constantly look at the screen, and you have to constantly be at your desk, so that if your trade goes wrong, you can timely exit it, right? And basically you have to devote time, screen time, if you want to do trading full time, right? Is it the correct understanding?
Yes, actually you answered two different things. So one is about your technical expertise. So trading requires certain technical expertise on the way.
Mm-hmm.
So, and the other thing that I will talk about is the trading also has different time frames. So if you talk about intraday, you are absolutely correct. You have to be on the screen. So I tried a lot of intraday trading strategies, and end of the day, none of the automatic trading strategies really work. There are certain times your instinct or the overall market direction really decides the future of a particular script. But also in trading we have different time frames. For example, intradays understood that it happens in a single day. Definitely in trading also there are different time frames.
Right.
So
Yeah.
one is the intraday that we discussed, that you are absolutely correct about this, that you have to be mostly on the screen if you are
Yeah.
mostly into intraday trades.
Yeah.
Because I found that the signals or whatever strategies, uh, most of the times they do not work due to sudden market fluctuations sometimes.
Mm-hmm.
So a slight better version, I would say, a longer time frame is the swing trade. In a swing trade, generally, we keep the stocks for, let's say, a week or 10 days or 2 weeks. So it's a slightly, a different time frame, and it's a longer time frame than the intraday trade, where you don't need to, just always, look at the screen, but you need to be careful. At least you have to watch the stocks daily, probably, or at
Mm-hmm.
least, 2-3 days at least. But you need to, you need to keep a watch or tab on the stock. So
Right.
that is more on a higher time frame. And if you are going for a positional trades, we generally take for a month or 2 months max. There you
Okay.
have more time to react to the stocks, I would say.
So is it like different types of trading require different types of skills, or different types of um, technical analysis or something?
So yes and no. So fundamentally, what changes is that the time frame that you look at. For example, if a little bit more technical, so you can calculate moving average on a daily basis, you can calculate moving average on a weekly basis, you can calculate moving average on a monthly basis. The thing is that if you just moving towards a higher time frame, the signals are more consistent rather
Right.
than a smaller time frame. So whatever
Okay.
signals, whatever positions, or strategies that you have, they work better in a longer time frame.
So are you
That has been
so do you so I mean, from what I understand is that your indicators and your moving averages, they are more consistent in the longer time frame. So is it like, does that mean that uh, it is better to trade for a longer time frame, like on a longer time frame, like swing trading or positional trading, as compared to intraday trading, because your
uh,
signals are more consistent in the longer term?
well, it again depends. If you want regular income, let's say daily or probably weekly, so monthly income trade might not help you there. So in that case, it is the objective that you have in mind, the time frame that you
Okay.
have in mind, and also kind of capital, as well as the number of trades that we are willing to take. For example, if you're taking monthly trades, generally we take fewer trades in monthly.
Right.
When you are taking in the intraday trades, your number of trades are also more. So you are
Right.
just trying to capitalize on the winning trades, because there are bound to be some trades where you are losing.
Yeah.
So end of the day, I would say trading is a game of probability, where you need to have some signals which increase your probability of winning.
Right. Right. Okay. Okay. Okay, I got it. So basically you have different time frames in different types of trading, and you decide the time frame based on your objective,
Right.
and the kind of time you can devote as
Yes.
well, right? So
Yes.
if you have less time, then you probably it's better to go for longer time frame, because you don't need to be
Yes.
on the screen all the time, right?
Yes. Yes. If
Okay.
you are a full time trader, you can definitely try intraday trading. But if you're not, if you have a job, if you're doing something else, it's very difficult to manage intraday trades, as you need to work something also. So I think for working professionals, swing or positional trades work better.
Okay.
Uh, if someone wants to be a full-time trader, I think intraday is definitely something that someone should try.
Okay. Okay, got it. So okay, it was nice talking to you, Shomo. I think uh, 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 this was more like an introductory session, I would say. In the next session, I think uh, what we would like to know from you is, maybe go a little bit deep into trading mindsets, and the mistakes that people generally commit in trading, and how can people avoid those mistakes. How can they benefit from your experiences, and how can they avoid the mistakes, and become a good trader at the end of the day, because that's the objective. So yeah, it was I think it was a great session, and I personally learned a lot, and I hope to learn more. in the coming sessions. And just we love to have you on the show. We can make this more regular affair, if if people like it. But yeah, thanks a lot for this, Shomo.
Sure, Raghav. It
Any
was
any
pleasure
any
talking to
ending
you.
comments from you? I would, before we
I
end
would
this.
say that if you are trading, then trade cautiously.
Yeah,
Don't jump into the trade with all your capitals. There will
right.
be always a better opportunity waiting just for you.
Sure. That's a great advice at the end. So thanks Shomo for the session, and let's see you in the next session.
Sure. And if
Okay.
anyone has any comments or doubts, please post that. I'll try to respond to it.
Sure. Thanks a lot. Bye bye.
Thanks, Raghav. See you
Yeah,
again soon.
my pleasure.